Hey, good morning, everybody. We have a lower to sharply lower trade in the grain markets here early on Thursday morning. It is 6:14 a.m. Central Time as I speak here this morning. We've got December corn futures down 13 3/4 cents at 5.54 3/4. November soybeans down 24 1/4 at 13.65 1/2. We have September Chicago wheat down 17.5 cents at 6.93 1/4. September Kansas City wheat down 12 at 6.56 3/4. September spring wheat down 19 1/4 at 8.78 1/2. You guys are watching on YouTube. Obviously, I had to do the podcast separate because I'm on the road this morning. So if you are watching on YouTube here, make sure you subscribe to the channel if you have not already, and make sure you like these videos. Help me to spread this stuff out. Much appreciated. We do have a little bit of a shift in the weather forecast here this morning. The Euro model in particular, and we've got some weather model conflict. The Euro model is introducing some rains for the early part of next week in Iowa, southern Minnesota, and some other areas of the Western Corn Belt. This may be the reason why the markets are down here this morning. Now, I'm not seeing those same rains advertised in the GFS. The GFS brings some rains back in at the tail end of July into the first part of August for really a lot of the Corn Belt. But in terms of these rains for next week here, I think it's kind of conflicted. But the market sees perhaps a slightly less threatening forecast here this morning. The sell-off does not have anything to do with the outside markets. Crude oil's higher this morning. Stock market's higher this morning, so it's not bad. It's not a currency deal. I think that this is maybe just an adjustment based on a slight shift in the weather forecast. Ethanol production declined marginally last week. We were down 1.3% on the week at 1.028 million barrels per day. Ethanol production's still been very good. We've been above 1 million barrels per day for 10 consecutive weeks now. So I would say in general, ethanol production is back to normal. We're doing very well here. Producer margins are break even to maybe slightly positive at this point in time. So they're not fantastic, but the grind has been very good. And that part of it's good, but you've got other parts of it that could be potentially bad. You know, a lot of political type stuff. I talked about these senators who were trying to kill the ethanol mandate earlier this week. There's a lot of that going on. I don't think any of it has much bearing here. We're doing pretty well overall in regard to ethanol. Minneapolis wheat futures kind of lead this wheat market lower here this morning. I think this is a simple correction in the Minneapolis wheat market. It's a correction in the flat price, and it's also a correction in the spreads. Your spring wheat versus Kansas City spring wheat versus Chicago spreads got to some pretty lofty levels. So I think you're seeing a correction in all of that. There's nothing out here right now that's going to save this U.S. spring wheat crop. It's beyond repair. There is some debate regarding the Canadian situation. There have been some rains, and there's some rain in the forecast for some of those areas, but I think that situation may be too little too late as well. Crude oil prices have rebounded really well following that early week sell-off. So on Monday, crude oil fell sharply because OPEC announced that it would increase production. And then we saw a big rebound. We gained $3 yesterday. We're back above $70 here early this morning. And this is all despite really two big pieces of bearish news. You had the OPEC news, and then we had a big increase in inventories yesterday when the trade was looking for a decline. So despite all of that, the crude oil has been able to rebound. The stock market has also rebounded. We had a big sell-off Monday. You know, the Dow Jones was down 700 points. The S&P was down sharply. We've reversed or erased all of those losses here. We were sharply higher Tuesday, higher yesterday, and higher again this morning. So the stock market has erased a lot of that. We do have a jobless claims report that'll be out this morning at 7:30 a.m. Central Time. Traders will be watching that closely. Remember, jobless claims last week were the lowest of the post-COVID era, essentially. So that's a good sign, and we hope for that to continue. We have an export sales report this morning. The trade is not looking for anything fantastic. We'll see if there's any surprises there. Remember, guys, August grain options expire on Friday. If you have any remaining open positions, make sure you take a look. The cattle market was higher yesterday. We saw some light cash trade, and it was perhaps marginally lower than what we had seen last week, 119 in the south, and then 121 to 123, I think, in the north. So we'll see what develops here later this week. We've got some time to improve on that here this week. The outside markets, again, look a little bit better. The S&P's up about 7 points. The Dow Jones up about 50. Precious metals are mixed, pretty quiet there. U.S. dollars up just a little bit. That crude oil, again, trading near that $71 level in the September WTI. Everybody have a wonderful day today. I'll be back in the office tomorrow. We'll talk to you then.